Good evening, guys. This is Ken at Tortoise Capital with the daily debriefing for March 13th, 2020, Friday night. So I'm not going to cover the daily and weekend reports yet. I'm going to do that more deliberately tomorrow. I'll have it posted by. So I just want to get a debrief of the week that was. So, and of the day, I should say. So this is what yesterday's market health check looked like. It had closed absolutely poorly, right on the edge of a 30% sell-off at the bottom of the 1, 10, and 30-day ranges, with more major support levels in sight that we're going to test weekly and monthly support levels. We're deep in the winter. You can see fair value was up here at 321, but we were down here at 248. Ouch. So just about everything yesterday had set up on everything had set up on the standard auto framer, so everything was so far away from its 10-day moving average that just about anything was going to be a good sell or a good buy, excuse me. So these were the trades I focused on. What I had said last night was I had adjusted all my short stops, and I was going to focus just on getting the market call right. It's rare for me to hold that many shorts overnight. You'll see when we get into the speed run that almost every short I had was hit by the gap up. That wasn't surprising. And my general approach was that if it gapped above where I wanted to have my stop, then I would just take the first exit that I could. I wasn't going to stick around. I had a lot of short exposure, so I didn't want to have a runaway market that never looked back, hoping it would come back. So we'll see that when we get to the speed run. But meanwhile, I was concentrating on my intraday targets, the usual suspects. I only had a handful of them today and really tried to get them. I was marginally good with them. So this is VXX. So it had a big gap down and then started finding some support through the day. Let's see. Why does that not look right? Yeah, I was going to say it didn't look right. That was yesterday's trade. Sorry. So here's today. So the first one I was working was VXX, or I'm sorry, EWZ. So we'll follow the bouncing ball. It had a big gap up and sold off sharply, and so it looked to me like maybe the opening wasn't going to hold. And so on a collapsing dragon, I got short, and then played the RLXD. And in a PSAR flip. Then I switched to a owl trade just before lunch. So long, and then that just kind of scratched out. Even though the 90 had turned and the river had turned, I've been pretty skittish these days, so that was basically a scratch. And then it immediately took off. I didn't take the RLXD. I wanted to see it clear this support level. It did, and so I got long, and then I took a fractional loss on the RLXD. Immediate stop and reverse again when it didn't fail further, and I bought the RLXD, and this one paid off, and I sold the RLXD at the support level of the VWAP. Took a quick break, got reset, and for the afternoon I tried the pocket entry north of the VWAP and held it as long as the PSAR, and not much. So a lot of trades in there. I was trading mostly for the broker on that one. Just didn't really pay off. So that was VXX. Next one was better. This was Cliff. Cliff's Natural Resources. Get my cursor here. Okay. So this one was About 45 minutes in, it made a low, then a higher low in the belly of the dragon. I bought the VWAP cross with a stop below the belly of the dragon here, and then played the RLXD exit. It came back, found support at the VWAP. I bought the RLXD, micro loss. I wanted to cash it north of the VWAP. Came down, it made an owl. I didn't buy the owl. I waited for the pocket to form, so I took the second entry. So here's a low, here's a higher low. Bought that one as it was crossing the VWAP, and that one paid off with the RLXD. So that cliff was pretty good. And then finally, Dow had a big series of trades on this one. Again, about this is like starting with like a slow frog, so I'm about an hour into the session. Here was a low, a higher low, so I bought the pocket, and it crossed the VWAP, came back, so I cashed the RLXD. I got short here. I thought this was going to be a collapsing dragon. It gave me something, but then held at the 270 and came back, so I scratched. I then bought the collapsing dragon, sold the collapsing dragon. That one paid off. I cashed it with the owl exit, took a break around noon. Bought the second RLXD in that little pocket, and held that through to the VWAP test and failed, cashed. Held support at the RL270, bought the VWAP, sold the VWAP, and that was about it for the day. This was a pretty emotionally and energetically challenging day. Plus, there were a number of strategy sessions here at the college that I had to attend, and so that was taking a lot of effort and attention. So my span of control was not great today, and my execution was average to below average, but still we get paid during the day. I was pretty happy with that. The market closed, the market health check at the end now. So we are still deep in the winter. I want you to notice very, very gently that MACD line is leveling off a little bit. 2 of the last 5 days have been big up days, so that's starting to just smooth it out a little bit. It's still at minus 26.25, so still huge losses in the winter, but it's slowly rolling into the spring. Not yet, but soon. You can see the one-day range. It was basically the same as yesterday's range, only it closed at the top instead of the bottom. So that really, a bottom hasn't been put in. But I think this was the market just reacting to the news that the Fed had committed to printing $3 trillion, and that Trump was going to say more about a national emergency this weekend. Nobody knows, much less him, about what that's going to mean. So I entered this weekend basically flat, and we'll take it fresh on Monday morning. A number of countries have already said they're going to suspend short side trading, so that was another reason to get out of the shorts that I had, even if you'll see that all of them gapped up anyway, so I was getting out no matter what. But even if I hadn't, I'd have covered those going into a long weekend. Too much room for policy changes to affect the short side. So we are closed back inside Z2. We crossed the RL10. Back inside Z2, almost at the edge of the dragon. Almost made up the difference to Monday's opening, so that staring into the abyss had a clarifying effect. The PSAR is still marching down. You can see the support levels to the upside are the skin of the dragon. The high of the day today, skin of the dragon, spine and upper skin of the dragon, RLXD, SMA 200, the RL90. The fair value is still 322. Then the peak of the RL90 and the 30 and the 10 and the dragon all up here around 340. Today's winners and losers sorted by percent gain. Dow, the triple Dow, was up 26%. Cliff, Devon, Brazil, all up over 15% between 17 and 20. Financials, technology, Apple, Boeing, Walmart, Diamonds. Energy was slightly better than the S&P. The S&P was up 8.5, and then all the usual suspects down here. On a weekly basis, no, I'm sorry, that's where I'm way out there. Hold on, gotta get back to. So here's the blank weekly chart for this weekend and the annotated weekly. So you might just go through and work on the blank. Is it where am I going to draw the support and resistance? So the things I'm going to highlight here are on the so this is the weekly. So we are in the fall and still in the Red River, so we're still above the zero line but failing. Fair value is at 235. No, I'm sorry. Fair value is at 310 on the weekly. The lower target was over here. I took the previous Z3 excursion and just drew that across and said if this fails through the two support levels at Z3 and the weekly low, then 235 would be the Z3 excursion from the previous calmitude. On the upside, you have Z2, weekly high, Z1, and the RL10. Fair value, skin of the dragon, PSAR flip, which also is basically the all-time highs. The monthly, let's see where we're at here. Yeah. So here's the monthly. On the monthly basis, we are still we just tipped into the fall, but with the south end of the Red River. See, that's a lagging indicator. You can see just how far we've fallen. We fell all the way down to Z2 on the monthly, and we're staring at long-term fair value at 235. Which was right near Z3, right? So we have support at Z2, at Z1, and then the upside targets are the Bollinger Band mean at 283, PSAR and the Dragon Belly, or the lower skin, at 295, upper skin 310, RL10 hump is at 320, and then the Z3 excursion, the upside's about 340, which coincides with the all-time high up in here. Okay, so quite a remarkable range of measurable targets that are going to guide us through the trading in the days and weeks and probably months to come. Okay, so let's do a speed run now. We'll get back to the daily, turn on the drawings here. Okay, so I had been short one Alcoa, and I had moved my stop down to here, but it gapped above, so I took the hit, and that basically scratched the swing. You're going to see that in most of these charts now. Apple, I've just been stalking. I'm glad, because it would have wiped out any reasonable short. The Aussie dollar, I've been watching Eric Morrison, just knocking it out of the park. He had a really good week in Forex. In his trading account was up like 10 grand this week. So he's doing a good job. I'm coaching him through how to turn his narrations and systems descriptions into our precise language. So he's getting better already. So he's going to work on a Forex course for us, and we're going to build something that allows us to demonstrate how to apply our techniques systematically to Forex. He's a PhD in rocket science and a career logistician, combat veteran, a certified graduate school curriculum designer with qualitymatters.com. So he's going to turn that into a really quality curriculum. I work with him on a daily basis for the last 5 years. He's a terrific guy. So the Aussie dollar, we're just talking. Boeing, I'd been short one. I had moved my stop down to here on yesterday, and then it gapped up, so I took the gap exit. You'll notice that in all of these, if I had stuck around, I could have waited for price to come back and then hit where the stop was and take the stop where I wanted to take it. But in the morning, when the market goes from limit down to limit up in the futures and has a huge gap up after a 32% sell-off, you don't stick around with multiple open short positions and hope that the market stops melting up. You just take your hits and you go. That's why I'm not a big fan of holding shorts overnight, but this was exceptional conditions. I paid the price today, though. Caterpillar, I had moved my stop down to yesterday's high. It gapped well above that, so that's still in the money, but look how much we gave back. That's just horrible. And then after I covered at the open, it sold off all the way and then came all the way back up, so what are you going to do? Cliff, again, I had moved the stop to here. I took the exit at the open, so a fractional win. Cut the timber. I moved the stop to here. Now this is one, that got smacked on the open again as well. This thing came all the way down. I was almost ready to get shorted again intraday, but it didn't quite hit my breakdown price, thankfully. And then it closed solidly. Diamonds were a big, huge move up by the end of the day, especially that run at the last few minutes. Devon Energy, why isn't that? Sorry, there we go. Sorry. This was short one from here, and my stop was here, and then we took the exit at the open. EEM, Emerging Markets, we were short one from 41. It had gotten as low as 33, and we ended up exiting at 36. So, again, I just feel sloppy on this stuff. But there was reasons to believe that thing could have gapped down the other way as well. Like if the Fed hadn't announced a $3 trillion printing program, these all would have been amazing. So you take your chances. EFA closed. Japan, we're just stalking. Mexico, I kept the short because my stop was still here. I wanted to give this a wide room. On another day, I might have had this here and would have gotten out, but because this was way up here, I'm now going to move my stop down to here. Try to take advantage of that one. Brazil, look how it gave back like 80% of that short because it holding it 1 day extra. Inherently trickier. We got short here and ended up covering at the open again. Russell, same thing, covered. Real estate. Again, I am short in the SPG, that Simon Property Group, not the retail real estate. McDonald's covered the short here at the high, right near the high of the day. Well done. PBW, again covered. Now I want to say that, I mean, I know that when I was deciding to keep those overnight, I put the stop where I want to take the exit if it's an orderly move, like near the previous day's low. And so I'm basing my position size off multiples of the gap stat and not necessarily the where this indicates it. But that's what I put that in place so I can make a decision in my rational mind where I no longer want to own it. I don't want to try to make that decision on the fly in the heat of the trade. SCO, that's the triple oil inverse, so covered along there. SDOW, trading at intraday. This is the Virgin Galactic's, covered that one. Simon Property Group also covered. So again, anytime it gaps above where that blue line is, I'm covering. SVXY is that intraday rascal. I'm really loving this exit up here in treasuries because it has come all the way back. Tesla. So this is one where I covered the short and then it turned around and failed through the place where I was going to add a second position. So I got short here and then it closed slightly above there. So I'm still going to respect this stop, but I'm short from here, so I'm slightly underwater on that one. Natural gas, just observing. Oil, just observing. UVXY, I'm long one here. I'm going to regret this one on Monday. But I'm respecting this initial stop here. Wiz, again, was broken. Walmart, I'm loving that swing, although it did close pretty well. I had thought about buying this one long at the Z2. And it turns out I should have. But I didn't follow my plan, didn't get the payoff. But that had a nice recovery today. Wheat and precious metals. We were short one and covered, and then I decided to get short on this one again today. So it opened and then started selling off. So I'm short from here. It closed here at this line. And I am moving my reference stop down to 24 3/4. Win. The casinos. Again, this is one where I'd had three positions short. Covered at the gap up. Then it sold off, so I got short again down here, and then it closed well. So I'm just as happy as I can be. I'm gonna move my stop to top of the day. So if it gets me, it gets me. I just don't see how they're gonna make any money there, unless young people just say, "Hey, you only live once. Let's go for it and go visit Vegas while we can." Maybe that's what it is. U.S. Steel. I covered the short here. Materials. I had my stop was here. I'm going to leave it there. Energy. Covered it here from a short way up here. That felt pretty good. Financials. Got short from here. Sorry. So short from here and then covered here. Tech covered basically for a scratch. Healthcare, I just morally can't short the healthcare industry right now. And back to Alcoa. So the daily report and the two weekenders will come out by this time tomorrow. I'll record a separate strategy session from them. Just a lot of lessons to digest. So I've posted all of those, the daily strategy sessions. Each one's about 30 to 40 minutes long. I'm going to put those into the prep work for that swing or the hybrid trading course that I'm doing for Van and Van Thorpe Institute in June. I'm going to string those together as a way to immerse those distance learning students in the ideas and the concepts in action. I just feel that it's very important to study extreme use cases like this. So we've got about 10 days now of nightly strategy podcasts and portfolio adjustments and thinking our way through the volatile markets from the inside of what it actually sounded like. So, I'm going to be studying those with the students over the next 2 months for that June streaming workshop, and I just think that there's going to be a ton of good ideas that come out of that. So I would encourage you to play along. Just because you're in here, you can be part of that as if you're taking that course. So most of the guys listening, the guys listening to my voice here that have access to the boot camp videos and the advanced swing and day trading, those are the prep materials I'm going to give the guys that are streaming this in June. So more than happy to roll your questions in as you study these podcasts. I don't know how long I was going to be able to do the nightly podcast because we were getting ready to start our soccer season out here. But all the local high schools and the athletic conferences and the pro leagues have all canceled their stuff. And so we're making a decision to cancel the spring rec leagues. And so my evenings, start next week, which we're going to be consumed with soccer practice, was going to make the nightly podcast problematic, but looks like I'm going to be able to do that now. So my intention is to keep these up for as long as it seems like we're adding value. So maybe I can sustain that. At least I'll do quick reviews of the master classes for that day. I may not do a total narrative, but still I think I can handle 20 or 30 minutes a night. So my plan is to do that as long as I can sustain it, and with your permission, that's what I'll do. So I'm rethinking the raising of the price on 1 April for the discount program. It was going to go from 5 to 10, and I just feel like that's not the right thing to do yet, and so I'm going to defer that decision not earlier than 1 May. And so there's I am okay with the payment plan on that one if you just have an intention. But if you're thinking about doing that, 1 May I think is when that price is going to go up. So let me know if you're interested. Okay, that's everything I got for you. I'm excited about Morrison and his Forex courses, and Danny's been doing some good case studies with the TC 2000 bundle. And just really proud of the work you guys are putting in and hanging in there. Kim, you just impressed me so much yesterday with your commentary at the start that it made me feel pretty good that the preparation and mind state is fully installed in you. So keep up the great work. That's everything I got, guys. I got to get ready for my doctoral strategy sessions tonight. My guys asked me, did I have any opinions about the effects of coronavirus on the world economy? And it turns out that I do. So there we go. Take it. Hey, Martin, what I was going to say is, if you would be interested in working with Eric on that, on an outline and the content topics for him to develop, if you would be interested in doing that, then I'll put you in contact with him, and you could give him some, advice from a distance, since you're a black belt in this stuff, having suffered through and survived a number of the, the research weekends. I'd be happy to put you in contact with him if you're interested for that, okay? Just let me know. Okay, take good care, guys, and I'll see you in the chat room.